I'll be doing the presentation tonight, and my background is I trade gasoline futures. I've been trading gasoline futures for the last 8 years. It's the only thing I trade. I'm not the stock expert, but I am presenting a strategy tonight on stocks. And some of you who know stocks better than I do will have an opportunity to participate in giving some information here. So I'll get started here. Let me see, I got to share my screen.
While you're doing that, let me just interject for the recording that we are the DC Day Swing Traders with a membership now nationwide, over 1,700 members. And this is Carl Lord, who has been with the group a long time. Thank you for tonight's presentation, Carl.
Okay, sharing now. The topic is conditional trading. It's a day or swing trading for people who work during the day, but it can be done by anybody. If you happen to be a day trader and you sit at your computer all day, this is something that you might want to try in the evening. So the question is, why would you do this? If you can't sit at your computer, but you still want to trade, and this is really important. If you plan to be trading someday when you retire and you can sit at your computer, don't wait till then to learn about trading anything. Do it now. And this is a way that you can learn how to trade. Even if you don't make any money at it now, you're going to gain the experiential knowledge that you need. You need book knowledge, which I will be giving tonight. Then you need experiential knowledge. And then you need Robert's rule, and that is discipline. You need those three things. And you can work full time during the day and still do that. This takes about 30 minutes in the evening. You could spend an hour doing it in the evening if you wanted to, but if you get good at it, you're going to take 15 to 30 minutes each evening and set up some trades and go to work the next day and not worry about it. So how do you do that? So I'm going to go through how we do that, but I'm going to get some other information. And when I get through the talking part, we're going to go through the mechanics of how you do it, how you set up a conditional trade. The trading platform that I use, and this is not a commercial, so I'm not advertising for it, but it's Thinkorswim, and I use the paper money. And this is very important. For those of you who have traded and you lose money, don't do it. You don't need to lose money to learn to trade. And I've spoken this many, many times over the years, you need to have a track record of success. You need to prove to yourself you know how to trade before you start using real money. So do paper trading. It's called simulated trading, paper trading, virtual trading, depending upon which broker you have. I like to use the word simulated trading, but Thinkorswim uses the term paper money. I used to have a Thinkorswim account. It got closed because I wasn't using it, didn't have any money in it, because I use another platform for my futures trading. Recently, I reopened a Thinkorswim account just for this presentation because I needed access to the platform to do conditional trading of stocks. I put $50 into the account, and it is allowing me to use paper money. I obviously can't really trade live with $50, and I don't need to. So if you get a Thinkorswim account, put in $50 to use their paper money trading, you'll get lots of emails asking you to fund it further. I don't know how long they're going to let me go on $50, but for now, that's what I'm doing. So then the other platform that's possible is TradeStation, and Robert pointed out this video to me, and I've got the hyperlink in here. And if you go to minute 12, the gentleman talks about, what do you do when the market's closed? How do you get around that? How do you place a trade when the market's closed? And he tells you how to do that on TradeStation. So that was proof that you can use TradeStation as well to do conditional trading. Thinkorswim is a really premium, lots of bells and whistles platform. There's more there than I've ever explored. On number 2, account size for live trading must be at least $25,000. I put this in here because we've never talked about this before. And coincidentally, we talked about it a lot tonight. But this is not applicable for paper money trading. So don't think you have to have $25,000 in your account to learn how to trade. If you have $25,000 in your account and you don't know how to trade, use paper money, period. Okay, the way we start out is we scan for stocks and create a watch list. And the price should be at least $10. Why? You want institutional traders in that stock. You want a volume of 30-day average of at least 1 million shares per day. Again, you want lots of liquidity in there. I know years ago, institutions couldn't buy a stock if it was $5 or less. I don't know what that number is today, but it might be $10, it might be higher. When we do the stocks scan, we're going to go with $25 because there's plenty of stocks. They're $25 and 1 million shares per day on the 30-day average. So we will have plenty of liquidity when we do that. And I'm going to just go over that right now. This is Thinkorswim. And you'll see up in the left-hand corner, it says PM, paper money, simulated trading. And that's what we're in right now. And on the top here, monitor, trade, analyze, scan. We're going to go to scan. And I've already set it up here for the stock, minimum price $25 for the last price, the volume 1 million. Now you can add other criteria if you want to narrow down your list. I'm gonna.
Hey, Carl, real quick,
yeah.
For all the newcomers because we're always trying to teach, can you explain why you chose 1 million?
For liquidity. Just lots of liquidity.
So that is not average volume, that's what it would be currently, like during the day?
30-day average.
30-day average, okay.
30-day average is what they go by.
Yeah, in my experience, if you don't, as Carl saying, if you don't have the liquidity, a lot of times what will happen is if you get into the stock, you might get locked into the stock and you cannot exit the stock because no one wants to trade or sell or buy in your favor. So therefore, a lot of times you could end up riding the slope down before you can actually get out.
Right. And also I would add, when there's low volume and the shorts arrive, they start what we call cherry picking, and they keep knocking it down a little each day, and there's not enough up volume to counter it, and you're helplessly lost.
Yeah, the million number is a good number, but it also was what was taught to me when I, many years ago, when I took Invest Tools classes. They initially, they were touting 500,000, and then while I was with them, they upped it to 1 million. So I suppose they had a reason, but certainly you're going to have plenty of stocks that have a 30-day average of 1 million shares per day. you won't be short those. So anyways, I've got the criteria here, and I'm going to hit scan, and we've got lots of, we got 100, currently at least 1,001 stocks that meet our criteria, and we certainly won't need that. I would recommend, once you get good at this, you're going to find stocks that you prefer, and you can build a watch list based on that. But I wanted to point out the criteria of that I use is $25 and $1 million. Again, I should point out this strategy that I'm going to show you tonight is purely technical trading. There's no fundamentals involved with this. You don't look at the PE ratio or the profit or all of those other bells and whistles numbers. This is purely technical trading. You're reading the chart, you're seeing a setup, and then you're putting in a trade with certain conditions. And if those conditions are met, you'll go into the trade. So want to hit save here. Save as watch list. And this little, on the right-hand side, you'll see where I'm hitting these bars here, and it says save as watch list. So I'm going to save this as DC Traders watch list. I'm going to hit save. And then on the left side here, I'm going to go down to personal, and there is my watch list. And there it is on the left-hand side. Very simple to do. Bigger than I want, but that's fine for right now. Position size. I don't recall us talking about position sizing before, but that is very, very important for anybody who's new to trading. It's critical. Do not get eager and try and become a millionaire overnight or in a week or in a month. My rule and what I was taught was to use 0.5% to 1% of your total account value. If you swim around YouTube, you're going to see the 2% rule quite often. And so I think rule of thumb is 0.5% to 2% per trade. I'm going to stick with 1%, and I'm going to go with 1% tonight in our examples. Does anybody else have any input on what position size they use? Really? Nobody?
I don't honestly pay much attention to it, but I mean, I use risk size, which is a similar component. I do like the spreads to be low. Like for me, you sort of touched on it, but like I like to have the spread to be, you know, like 0.25% of the stock price or so or less. Like if it's over 0.5%, I don't like to get in. But the account value thing will vary. It just depends on how big your account is, I think. And, you know, 1% is good because that means if you scale it, it'll take you 100 consecutive losses to lose your account, which, you know, shouldn't happen, but it does with some. But I think that's a great number. And, you know, newer, a half to even lower is good. 2% for an experienced trader, in my opinion. someone that knows what they're getting into. But it's important to look at position size for sure. Yeah. It's like if you have enough money, though, it won't matter or if you have enough buying power. To me, it doesn't matter as much because you just have to stay within your risk size, and your position can be as big as it needs to. Like if you happen to find a 3-cent stop on a relatively expensive stock, you're going to need a lot of account value to trade it. So it might go above a couple percent. But I guess those are fine points, though. I like your rule, Carl. 0.5 to 1.
Yeah, and I teach to do the paper money trading the way you would do it with real money. So don't get eager to do a $10,000 trade. That's not the way you're going to do it in real money. So yeah, keep it low. Certainly when you're starting out, 1% is sufficient. So okay, I'm going to present 5 setups tonight, but there's an infinite number of setups, a lot of different setups, but I'm just going to present 5 of them. And one is the swing flag method, bullish, the breakout method, bullish, swing flag method, bearish, and the breakout method, bearish. And then there's one that I just found as I was researching and preparing this presentation, and that is the moving average crossover. I have never used it, but I am thinking I like it already. It looked very interesting to me, and there is I put in a hyperlink here to a video that teaches it pretty well, and I'm going to go over it tonight too. And we're gonna set up a template for this. But this looks like a really promising setup that I'm very interested in. Now,
Carl, excuse me.
Pardon?
Hi. If I could just backtrack one second because I got distracted. I think that for a brand new trader, a position size based on a risk amount, like Robert was mentioning, might be a $20 risk or a $50 risk for a brand new trader who just needs to learn. Because 100% I agree with you about paper trading. You don't need to lose money to learn to trade. You can learn and then start with real money. But even when you start with real money, you're going to find it different emotions than paper trading. So the smallest amount, that's what I would emphasize to new traders. Thanks.
Okay, good. Let's see here. Yeah, I wanted to talk about pitfalls. When you're a day trader and you're sitting at your computer and some news comes out, or the Fed makes an announcement, or oil well blows up, something that can affect the price of a stock, you can see it on the chart. You can read the chart and you can see something that's happening and you can trade that. You can't do that with conditional trading that I'm going to teach tonight. But so in part of the education, part of the experiential part of experiential knowledge is pitfalls. And I'll give you an example. Before I got into futures and I was trading stocks and I was doing some options, I had this rule that, you got to stop trading a stock in like 5 days before the earnings call. So I looked at the stock. I thought, well, here's a setup here. I want to trade this. So I get into the trade, and I saw that I had enough time before the earnings call. I get into the trade, and the next day, its competitor had its earnings call, and it was a bad report. And it made my stock just slam out at a loss. That's experiential knowledge. And so as you do this conditional trading, you're going to know you're going to have some losses. You're going to have some things that are going to go against you, and then you're going to have some big winners because something happened that made your stock go up or made it go in your direction, either up or down. So you're going to learn those things, and you need to learn those things doing the paper trading. That's part of getting qualified to do real money trading. The pitfalls are news about the company you're trading the stock of, its competitor, the sector, economic news, and forexfactory.com is where you're going to get news that can affect stocks. Now, today, there's just like Italian trade balance, low impact expected. If it's yellow, you're going to see here low impact expected when you put the cursor over that. Let's go tomorrow. Okay, tomorrow is a high impact expected by the CPI-YY, whatever that is. Wherever it's red, this is Great Britain. This is Canada, I think. But the red is high impact. I think it's yellow, orange, and red. Orange is medium impact. So you can, tomorrow happens to be a crude oil inventories report at 10:30. That affects me. And I know that that's going to happen. I generally don't trade before 10:30, and at 10:30, that report comes out and the price can explode one way or the other. And it takes a lot of experience to know what it's most likely going to do. But you should be aware of economic news, and this is where you can get it. And there's certainly lots of places where you can get all sorts of news that'll affect your trading. Earnings reports for both your company and the competitors, as I mentioned. Now, exchange traded funds tend not to be as affected by news, because if one stock is affected out of the entire fund, it's not necessarily going to move anything much. So you can do exchange traded funds, and in time, if you get good at conditional setting the trades, you can do the 2x, 3x ETFs, which would allow you to make more money. We're going to be very conservative. We're only starting out with stocks, and that's what I recommend. You start out with stocks and then move to more aggressive things like a 2x or 3x ETF, where you can make 2 or 3 times the money with the move. So what we do, now we're getting to the hows here.
Yeah, Carl, can I jump in real quick?
Yeah.
Hey, on the pitfalls, I just wanted to kind of bring this up, kind of an experience learned for my part. And going back to the scan that you did earlier, where you set the criteria and you got 1,000 different companies, there's thousands all over the place, tens of thousands each you can get. And matching that up to the pitfalls, especially for like a new trader, it's good to, and you kind of target in this in the way you trade, which is the concept of you focus on a group of stocks and you learn those stocks and the way those stocks move based on competitors, based on the news, based on global news, administrations. And then you can actually learn if a competitor comes out with, let's say, a bad report. Yeah, your stock may slam for the day, but the next day it rebounds because that company doesn't truly follow what the competitor does. It acts on its own. And so by learning and doing the paper trading and learning the ebbs and flows of each one of these companies and keeping a narrow list of good companies to track, you get the feel, and you can actually start calming, as I think Beth mentioned, you can start calming that psychological effect of the trading and the way the market moves. Because with all the retail trading nowadays, you could have some really wild, crazy swings just because of knee-jerk reactions.
Absolutely. Absolutely. Yeah, it gets to my old maxim, know your instrument. And if you want to get your watch list down from these thousands to some smaller number that maybe it's 25 stocks, and those stocks pretty well because you trade them over and over and over, and you get the experiential knowledge from trading those stocks. Okay, so what we're going to do is we're going to enter a OCO trade. An OCO is one cancels other. And we're going to learn how to do a custom order as well. So the way you do this is you do it after 8 o'clock. My question to you is, do you know why we would do it after 8 o'clock?
It's when after hours trading ends.
Pardon?
Isn't that when after hours trading ends?
Yes. Yeah. You do it after 8 o'clock because the market is not moving. And we're going to do this on the daily chart. And let's just take ABBV. Let's take go to charts. I'm going to charts here. Apple is not set up very well right now, so I don't want to use that. ABBV. Let's see what this looks like. That's in a sideways channel. It kind of looks like it has a somewhat of a small double bottom here. It's at the top of the channel. Is it going to come back down, or is it going to break out? We don't know, but I think that we could do a breakout setup on this one. Here's the high right here. So let's try doing an OCO trade with this particular one. So if you right click, you want to do a buy. I hope I can remember the mechanics here. There we go. Go to buy custom, click on the price, go to buy custom, and with OCO bracket. And that comes up down here. And we want to go 20 cents above this high in this channel. And the high is 145.87. So 145.87, 146.07. Now let me just go. And we want to put in a limit price here for taking profit. And I'm going to just arbitrarily take 150. I'm not even going back up to the top here. I'm being kind of conservative here on this. And you want to put in your stop loss, which I already put my note. I already put my note on my presentation here. So I'm going to go to the presentation. I'm going to go back here. Breakout, set stop loss at 3% below resistance. Well, that would be, if resistance is the top at 145.87, 145.87 times 0.97, our stop loss would be 141.49. 41.49. Now, somebody might notice that our profit to loss might not be as desired. 141, so 141. Well, what I'll do is I'll hit send and it'll show us on the chart. Oops. Got to keep moving Zoom around here to give me, just go ahead and hit confirm and send. And we can confirm here, we want to buy at this price, we want to sell at this price, sell at this price. So the only time the sell orders will come into play will be if we get a buy. If price hits our buy price and goes in, then the other two will be activated. And you do this after 8 o'clock, you put it in, let me go ahead and hit send. So there's our trade. And you wake up tomorrow morning and you go to work. And during the day, it's either going to hit or not hit. Now, one thing I should mention is forgot to put good to cancel. That's what I forgot to do. I want to edit this thing. Let's go over to monitor. Let's cancel this thing.
If you've already submitted it, you can do a cancel replace.
Yeah. Oh, I just canceled it.
Okay.
And what I'm going to do is do it all over again. The high there was 146.07, 146.07, and 50, and Where did I just, my calculator, oh, there, it almost walked away. No, it did. 141, okay. 141.49. Now, over here, where it says day, we got to do GTC, good to cancel. Okay. Now we hit confirm. We hit send. And now if tomorrow, after 9 o'clock, after 9:30, it gets into this price and goes up, we make money. It gets into this price and goes down, we lose. These trades can take 1 to 3 to 5 days. It could be a day trade, or it could turn out to be a swing trade. So you take the high, you add 20 cents, that's where you start. And then targets, I've done that presentation on targets, prior price level, Fibonacci level, or enough. I'm not a stock trader, so I'm not sure what enough would be. Robert might know more about what's enough for a stock than I do. But this is a conditional trade. You can look at this the charts after 8 o'clock. If you see a setup, something you like, then enter the trade, wake up tomorrow morning, and go to work. And then when you come home, you can take a look and see what's going on with the monitor tab here. And what I'd like to do now is show you how to do this really neat trade. And I want A, B, and B. Oh, A, B, N, A, B, A, B, N, B. Yeah, this looks like something that has enough movement up and down that I'll just use it as an example. Let's try, but we'll take a look. ACGL. Let's take a look at this one. I'm looking for one. ADBE. Oh, this one's kind of interesting. Let's use this one as an example here. The moving average setup. This is something that's new to me that I think is really interesting. This appears to be a downtrending stock right now, and you want to enter a trade on the second candle after it closes below the moving average. This is a 20-period moving average here. And we're on the daily chart. So I have written out these instructions on how to do this, and I posted it on Skype, and if they had to get a hold of this. But also there's a gentleman that has, I got to keep moving Zoom around. There's a gentleman who who, if you go to this YouTube video, he does an excellent job of telling you how to do this setup. And I'll walk you through it now. So we're going to do right click. We're going to do a sell. We're going to go here to edit in the lower left. See if I can remember this by heart. We're going to go over here on the far right-hand side. There's this, can you see the little gear here? You're gonna double click that and the order rules window is going to come up. We're going to change this to a market order. We're going to change the time in force to GTE, good till cancel. We're going to go down here to symbol, put in Adobe, and then on method, we're going to go down to study. We're going to go to edit study. And then you're going to see a simple moving average here where my cursor is. We're going to delete that. Because that's going to, for some reason that pops up, don't know why, and we have to get rid of it. Then here on the left-hand side, we're going to click on add condition and select condition price. We're going to go to open. And on offset, we want to offset this 2 candles so that it's the second candle above. Actually, we want to do a sell. Didn't I say sell? Yeah. Start over. Or did I say sell? Yeah, sell. Okay, we do sell. We do edit. We bring this up. We do market, do GTC, do our study, edit, delete that. Then add condition, go to price, go to open, and we want is less than, we want offset by 2, and we want to go to select condition, and we want to go to study, and we want to go to the exponential moving average exponential.
Hey, Carl, what does study mean?
Technical indicators. MACD is a study. Stochastic is a study. A moving average is a study. So it's your technical indicators.
I've never heard it referred to like that.
Yeah. Well, that's the terminology that Thinkorswim is using. On length, right here, it comes up 9. We've got a 20 period moving average on our chart, and we hit save, and we hit OK. And now here under description, submit the following order: sell at current market price. This order is valid until either filled or canceled. And 2, wait until the following condition is satisfied. Open from 2 bars ago is less than moving average. So we confirm that that's our description. We hit save. And before you hit confirm and send, you can create a template. That's the little floppy disk icon there. You hit that, and you can name this I may have already done this. Sell EMA 20 and hit save. So when you go to sell custom, you can see we have sell EMA 20. I already had buy EMA 20 in there. So we now have a template. We don't have to go through all of that every time. You just hit sell custom, sell EMA 20, and you're set. And we can now hit confirm and send. And one more thing I want to point out before I do that. Since we are going to be shorting, we're going to start the trade with a sell and end it with a buy. You have to look up here in this little box here where it says ETB. ETB stands for easy to borrow. That means you can short the stock. If it says HTB, you will not be able to short the stock. It has to, the broker has to have sufficient number of shares in their inventory for you to borrow from. And I'll give you an example of one that well, that was easy to borrow too. There's one. ABNB. You see, it changed to HTB. You cannot short this stock. So you can't start your trade with a sell because it says HTB. So we're good.
I know, it was fun. It was really interesting. How much is the annual
hit confirm and send and send. And now we've got this.
Assuming Doug sends us out this information.
Gotta move on. So we've got this Adobe. In place. Here's my. Gotta keep moving zoom around. Okay. Weight and condition. Right there. Does anybody have any questions on this?
That's a lot to absorb there.
It is.
That's an amazing order tree there.
Yeah. Just put in for the moving average crossover. It can sit there for days.
Yeah. When you're saying the 2-bar thing, is that once the day begins, so it won't trigger you in until a second bar?
Correct.
Okay. So it can't use last night's bar.
No, it hasn't closed below the moving average, 20-period moving average here. It's going to have to close below, so it can't execute tomorrow. It's impossible for it to execute tomorrow. And then if it does close below, then the next time it closes below, it will execute.
Okay.
Going back, you would see here, if we had put it in place back here on August 18th, it would have closed below, and then on the second candle, it would have closed, it would have opened up here, and it would have taken us in. and it would have given us a nice ride. Now you're going to have to manage this particular trade. I think once you get into the trade, let me ask experts of toss, can you then add a stop? Do any of our Thinkorswim users know that?
When you say add a stock.
Stop.
Oh, a stop?
A stop.
Yeah, you could, once you're into the trade, so you're saying once you execute the trade, can you then initiate a stop loss against that trade?
Or a profit target?
You can automate it with one triggers another. So you could do one order. So once the one order triggers that, you can make a whole tree out of it. One cancels another, or one triggers another, and you can pile them up so that you could set a chain reaction. Once this trade opens, then I have a contingent order on that for a target and a stop.
Okay, that's what you would have to do on this one. It's not an OCO. So when it goes in, and there's no limit and there's no stop on it. You have to manage it either day to day or go back and put that on. But you can do that after 8 o'clock. You can do that in the evening time. So that's the good thing about this, is you don't have to be home during the day. I really like this setup. I wish I had known about it years ago. I would have been practicing this for a long time to see what I can do. So if anybody does use this, I'd really be interested in knowing what your results are. Now, the one thing I want to mention, I would advise against trying to buy on a downtrending stock, and I would advise against trying to short. Let me say, I would advise against doing a long on a downtrending stock, and avoid shorting any uptrending stocks. Go with the trend only. I think your percentage of success is significantly better if you go with the trend. You're going to see things that are going to make you tempted to go in the opposite direction. My experience with trading is that's a low probability of success.
What is the time frame for a downtrending stock or an uptrending stock?
I'm not sure your question.
What is the time frame for your criteria when you said don't short an uptrending stock and don't trade a downtrending stock? What's the time frame? Like a week, or in the chart, a day in the chart?
Well, you have to look at the chart. Right now, this appears to be a downtrending stock in front of us, Adobe. That appears to be a downtrending stock. I don't know when it's going to reverse. It might be in the process of reversing right now. I think.
Carl, are you sharing your screen, or?
Dallas, I would say that depends on your personal system. That if you typically look at certain time frames to establish your bias or your trend, then that's the one you need to regard.
Yeah, I generally do a weekly fast to take a look. If that looks in a weekly uptrend or downtrend, then I drill down to daily to establish my interest in that over.
I was going to say, I think this is a really good question, though. I'm just guessing at what you're getting at here, Dallas, but you could look at a stock and it could be, if you're looking at, let's say, the monthly chart, it could be in an uptrend. But then when you look at the 1 year chart, it could be in a downtrend and it's just a bounce. So how do you, so I think it's a really good question. I mean, what time frame are you looking at, Carl, in terms of minimizing risk to say, well, it's an uptrend, you know, I could go in for a short trade because the risk is low?
I don't have an answer for you. You know, I think I'm going to refer to those of you who trade stocks regularly.
I think maybe for starters, go up one time frame. So if you're normally looking at 1 day bars, so look at 1 week bars and see how the trend feels on a one time frame up from what you usually look at in general. Or maybe look at a much longer time frame. What are you showing here? This is a year basically.
3-year weekly.
Okay. So you could also just, whether or not you change the time frame, zoom out to a, let's say, 5-year instead of 1 year. But for my purposes, for example, I trade off of 1 minute charts, and I'm establishing a trend on a daily chart and a 5 minute and a 15 minute. So I think zoom out is one principle and look left is another principle.
Yeah, there's a reverse way to look at that too, that I look at sometimes, and that is I need to have at least 2 time frames going in the direction I'm going in. Now, if I'm trading a 15-minute chart, that means I want the 15, obviously, and I want the next higher one or lower one to also be in my direction. But I think what Beth is saying is also very, very handy. Just, you know, make sure that higher time frame is going your way. I don't track this currently, but I've spent a lot of time tracking trading against trend, and also I have a little thing where I evaluate market bias, and I found it astounding how bad I was when I tracked it at trading against, well, I want to say market bias, because since I do day trade volatile stocks, sometimes the daily or weekly is in a downtrend and I may buy it, but I have to have a bullish market bias to buy it, because I'm 9% when I'm against market bias. It's like not worth taking a trade.
But Robert, market bias for the day or market bias of the year?
Well, for the day, for me. But again, I would take into account your time frame that one's trading. You know, if you're buying on a daily chart, I think you need the weekly too. Wouldn't want to get a daily buy on a weekly downtrend. I mean, unless you think we're at a bottom for some reason. But I think Carl's advice is good. You know, don't trade against trend. And then the question was, how do you evaluate the trend? And there is no certain answer to it, but it's like just about everything now is in a downtrend. Yet I think it's a good time to start poking it long, because you know we may have hit a bottom last week. I'm not calling it yet, but you know, but that's a rare example of where you might go against a trend. But in general, it's just a great rule.
Here's an example of what I'm talking about on this moving average crossover. I brought up Baidu, and right here at 10:04, it crossed over and it closed. So if you had a conditional trade to buy, you would have gone in the next day and it would have just gone down. So what I'm
so
saying,
where would your stop be?
Well, the example that I'm giving you here, well, the stop would be 3. Well, that's a good question on this one. I don't have rules for this particular setup for a stop, so I'm not going to advise you on that. But my point is, you know, if you saw this and said, "Oh, great, I'm going to, I got a crossover, I'm gonna do a buy," it would have gone against you because the trend is down. So there's an example where you think you see a setup, the trend is down. Don't try to trade against the trend. If I saw this close above, I would wait until here's one that closes below. Then I would have gotten in on this candle here the next day short. That would make sense.
Right, and going to that, Carl, if you switch to the 1 year week, you'll probably see, like what everybody's talking about, you'll probably see the extended downtrend for Baidu that really points out the fact that, yeah, see, so if you look at the weekly just before that, you see it's in a fairly drastic downtrend at that point. So that's where you use the, you know, one time frame above in order to validate.
Okay. There's another example here on Baidu. It's a great one. This is really a good setup here, right here where I've got 826. You can do a great conditional trade on this setup, and I'll point to it here. Swing flag method bearish. Stop loss 1% above the high day. So what you see here, you've got the high day right here at 826. And on each side of it, it's bracketed by 2 lower highs. That is a really good setup. You've got a downtrending stock here that has a pullback, and you get a high, and then you're bracketed by 2 lower highs. You got a lower high on the left, you got a lower high on the right. Your stop would be 1% above this high price, and you would get in 20 cents below this candle, so you'd get in about here, and you could ride that for quite a ways. I mean, that is just a beautiful setup. Even I know that's a beautiful setup, because you'd see something like that, even gasoline futures, and you would salivate and say, yeah, okay, great, I'm going to go for that. So this is a great setup for this. This is something you really look for in downtrending stocks. Look for this setup and do a conditional trade. And for uptrending stocks, you want to have a low bracketed by 2 highs, 2 higher lows, and then set it to go up. Never forget that setup. That's beautiful. We've got plenty of time. We can go for more examples. How would you interpret this one? I'm, this is a little bit wider spread than some of these other ones, but how would you interpret that right now? Would you still say that's a downtrending stock?
My answer is you have to go up a time frame. Because the downtrend's broken, but there's no uptrend yet.
There's the weekly.
It's still a downtrend.
Still a downtrend.
Yeah, you'd have to wait until it got up to the previous resistance of 70 and break through.
Yeah. So this on the moving average break, what I don't like about this is it closed, it broke through, but it actually closed above. It did not close below here on this candle here. It closed below here, but then it's got this pullback. So I don't think I would use that as a possible setup for a short using the moving average.
Do you consider volume in this decision making? I don't see it on the chart here.
I do not, and I took the volume indicator off. With my trading, I can see the volume in the price action during the day. I don't need the volume indicator. It's just for me as a day trader, it's just noise. I can see low volume when the price is moving very slow. I can see high volume when the price is moving fast.
Fibonacci chart.
Pardon? I thought I heard somebody say something.
Somebody did say something.
I was just wondering if you would use your Fibonacci charting tool that you use for your gas futures.
Yes, if I were trading stocks every day, I'm sure I would use that tool. In fact, why don't we go? I'm not sure. I'm trying to find where Fibonacci. There we go. It's been. There we go. Fibonacci retracement. It's the high. There's the low. It's gone up to, it pulled back to just above the 50, not quite to the 61.8.
I think in addition to an uptrend and a downtrend, there's something that's undetermined trend. That's how I would label this one, because it did break the downtrend, like Robert said. So it made a higher high pivot above that, what is that, mid-September little pivot, but it hasn't shown the higher low yet. That tells me a new uptrend is established. I would only know that when this current pivot plays out. It either has to go higher than the little trend you're showing now, or or it's going to go below that late September low. So right now, to me, this is trendless.
Good description.
So Beth, I would translate what you just said. If it's trendless, then the risk level to me would be high. Would you agree with that?
It depends on anyone's individual trading style. I trade with a trend, so to me, I would just pass on this. I would move on. That's a no trade for me.
Does anybody have any particular stocks they want to look at?
Sure. I'd like, we for months have been looking at BW. I'd like to know what you think about that.
EW?
BW, Babcock and Wilcox.
DW.
No, B as in boy.
Oh, BW.
Right.
BW. Well, it did close above the 20 period average. Well, to me, this looks like it's a double bottom with a potential W. There's one leg here. There's the mid, there's another leg, and the target would be somewhere in this area up here. So it did, close above. We could have entered here today with the moving average break crossover, and potentially gone up. But that to me, and you've got a divergence on the MACD and on the stochastic. You've got fairly clear divergence. So it would have been nice if we had gotten in today.
Carl, I don't know if this one passes your initial screeners for price and volume.
I don't either.
I think it's under $10 and maybe 300,000 or 400,000 shares a day.
No, I agree. The volume's not there.
Yeah.
But I own it.
Interestingly, zoom out to like maybe a 5 or 6 year time chart on this.
Yeah, to me, the chart's sort of a mess, but I do own it.
There's 3 years.
You're going to have to go a little farther. Can you zoom out to 2018, 2017?
Add time frame. What, 5 years?
Okay, give that a try.
5 years. Day or week?
Yeah, anything. I mean, you probably won't be able to see it daily, so try week or even month. Just
There's 5 years.
Mm.
It doesn't move much.
Okay, yeah. What I'm trying to show you is that if you go back on this to I don't know, when I hit a 5 year time frame, it takes me back and it shows me that in February of 2018, it was above $70. And then it came down, and then even, I mean, earlier than that.
Well,
It had a pretty hard fall. When it went public in 2015, it was above 200. So
yeah, did it actually take the 5 year week? Because if you look across the bottom, it looks like
it doesn't make sense. No.
It looks like it's in the daily still.
It says 5 year day.
You can double click in the chart. See if that. There you go.
Oh yeah, there we go. Yeah. That's something not doing. I wouldn't trade that. it doesn't do anything.
I know, it's frustrating. But I'm in at $5.99.
Well, now you know why it's frustrating.
Well, yeah, but they've got some good technology. So
technically, it needs to get over $10 before it, to me, before it's anything. Otherwise, it's right now it's just in a multi-year base at the low. And if it gets over $10, you might have something. Because it's not falling anymore. So, you know, somebody's supporting it somewhere.
Yeah. Well, I will say this, you know, as I mentioned at many meetings, we've for those who are new, we've tracked this. The last couple of meetings, we haven't looked at it, but before that, we looked at it at about 8-9 meetings in a row, that and Nokia. And as I mentioned earlier, the CEO of the company is also the CEO of their largest institution, which is B. Riley. And about 3 months ago, they had restricted stock and warrants, and they flipped it, but they didn't sell. They kept it. So they flipped it into shares, 1.5 million shares. So if they didn't, that to me was a sign that they have confidence in the company, because otherwise most institutions will flip those shares and sell them, but they didn't sell them. They added. So, and they've got this hydrogen bright loop technology. It's pretty neat stuff. They're winning a lot of contracts. So, and they were doing good. They were in an uptrend. And then when the market hit all this crashing, they got shorted and hit hard. But I still believe in this company. I'm just getting, wondering if I should, you know, take the profit and just, you know, apply it elsewhere, because it is going a little too slow.
It could stay here for years. I mean, when I very first started trading, like even before I day traded, I used to look for stuff like this that just sat down at the bottom for many years, and then would all of a sudden get a breakout to the upside. And then that was the thing I used to like to buy. But the problem is waiting for the breakout. It could, you know, it could take forever. I don't do that anymore, so I don't know how they react now. But I had some decent success with that like 20 years ago.
There's some ticker requests in the comments. AT&T, Netflix, NVIDIA.
Yeah, I'm just looking at that too.
Before anybody leaves, I want them to know that I've posted all of this information on Skype in a room that I set up quite some time ago for the, you know, what do we call it here? DC area day swing traders. And you can if you join that room, then you can download all of the information.
Oh yeah, and I should mention before anyone goes today, I should mention, please subscribe to our YouTube channel. It's free. All it does is up the counter, but we're trying to get to 1,000. It's going very slow. It's called DC Day Swing Traders on YouTube, our own channel. You can look at past recordings, Rob's training, different people's training. And we have 2 videos on cryptocurrency. And my daughter is in the process of converting more. She's been working on it.
Yeah, so the presentation materials and the instructions on how to do the exponential moving average crossover initial trade template. And I want to point out, there are a lot of YouTube videos that you can search through and watch and find other conditional trades that, you know, you sit at your home after 8 o'clock, put in the trades, go to bed, wake up, go to work. You don't have to worry about what's happening during the day, and you're going to learn. So, and one more time, I'm going to say, don't use real money. Do simulated trading. That's my presentation.
Oh. Does anyone have any questions? Do you want to look at the, we have some requests, as Beth pointed out. Should we look at AT&T and Netflix?
ATT.
I think it's just T.
What is it, AT?
No, I think it's T is the ticker for what Patrick's looking at. Right, Patrick, you're talking about the ticker T. Yeah, AT&T, that's T.
I think most stocks are in this funky area here where it's had a big move down for a very long time, and you just don't know if this is a reversal or if it's going to continue down. I think that this is something you could watch, and if it closes below the 20-period moving average, you could use that the moving average crossover setup for that.
Yeah, T is in a downtrend on every time frame.
Yeah. Well, what's the other one?
Netflix.
And
he thinks is screaming along, by the way.
Is that Netflix, NFL? Yeah. That's just going up and down.
No, it reported tonight, and it's got a $40 gap on it.
Is that good for you?
Well, if it pulls back now, I like it long personally, but that's because you've got this daily base now that it's above. This is the base breakout I've been waiting for. Unfortunately, it's happening on a gap here. It's 275 was the last print. But when this pulls back to 260 or 250, if it does, I like Netflix long. That's just me personally, though. But weekly downtrend's over now, and daily's got a nice breakout.
Any others?
I think Steven's asking about the VLO.
VLO?
VLO, yeah, Valero.
Yeah, do we do NVIDIA? We didn't do that one. That was another one there.
See, the whole market seems to be going sideways.
Yeah, Valero's swinging back and forth based on OPEC decisions and the administration's energy policies. I've been following Valero for some time now, and it's just swinging left and right.
I've been surprised that the futures, at least my gasoline futures, are tied to oil futures, that they haven't been going up further and faster. Today was a big fairly big pullback in the morning, and then it kind of evened out in the afternoon. But I've been expecting big moves going up, but I just haven't been getting them during the day.
Carl, how do you read the stochastics and the MACD here? How does that help you?
When it's going sideways like this, it's not as helpful. I don't see anything on either oscillator that predicts it going up or down. The oscillators are very useful when it's made a big move down or a big move up. Then you can tend they will help you find bottoms, they will help you find tops, and you can use them to exit trades. And if you are a retracement trader, they can help you find entries. I'm not that big of a retracement trader as I used to be. I just found it a whole lot easier to make the money before it gets to the retracement. And then it gets riskier when you're dealing with the pullbacks. So
do you use it to find targets? Like, can you, let's say in that, what is that, September 26th low? Is there anything about these indicators that tells you there's a big reversal coming?
A little bit on the MACD. The MACD is, let's see if we can, there we go. You've got this low point here, and there's a little bit of a divergence here. So you got price going lower. You've got the MACD going a little bit higher. It's not a huge divergence, but it's a little bit of a divergence. So that would make me suspicious not to continue to go
to press
short.
Yeah.
To go short. It's possible that it could go down further, but I would never look at that and say, okay, it's broken below this low here, I'm going to enter a short. I wouldn't do that given what I see on the MACD.
Let's say you were short from the left-hand side of this chart. Then what's your trade? When would you get out of this? Is that a realistic question?
I would probably get out of it about right here. If I'm in here, let's say, and it pulls back a little bit, but then it keeps coming down. I would probably get out here thinking I have enough, because that's a fairly big move. If you get more here, if you wait, but you don't know that you're going to get this. There was a guy that I used to work with at Hughes Aircraft Company in Fullerton, California. His name was Les Moore. So if you asked for more, you got less.
I love it.
So you don't in my trading with gasoline futures, I don't try to get all of it. I either hit a Fibonacci after a big move, or I think I got enough. I don't try to get more. But exiting is always a little bit of a guessing game. What was it? Was there another one after Valero?
Yeah, wasn't it NVIDIA?
NVIDIA. NVDA. Well, that's still trending down.
Yeah, I've been watching a lot of the semiconductors, and they're all definitely trending down. And there was a report that came out that the DDR5 prices are starting to drop, and we also have the slowdown in tech with PC and laptop purchases due to the interest rates going up. So they've been pretty much sinking through the quicksand here.
The problem I have with, and I'm completely thinking day trading in my specific instrument. This has made such a huge move down. You don't know where the bottom is, and I get fairly nervous when it's something that's been going down for what, 6 months here. And I know we have, there's an economic situation going on that may drive it down further. But I get really nervous. If there's a pullback, if I saw a pullback, and then I saw it cross over the 20 period moving average, then I would probably be interested in that. But I'd want to see some pullback. Well, it's 9:30.
All right, Chris had Neo up there as well. Could be the last one.
Oh,
you want to look at Neo?
What's the
NIO?
NIO. It's come down. It's kind of got.
Looks like a triple bottom.
That's what I was saying. I would probably call that a triple bottom right now.
Yeah, triple bottom with caution because that last leg down looks pretty steep.
Yeah, see, this would have been a nice crossover trade. It's below, and then we get in on the second one, and boy, we would have had.
It'd be interesting to see what the volume was like for that leg down to see if the institutions are jumping.
Now, I do see on the MACD, I do see some softening here. It's the MACD tends to be moving up here, and let me. There's never enough real estate. I tell you, there's just never enough real estate on these charts. So I want to take a look at.
You need a triple screen.
Yeah. It looks to me like there is a divergence right here on the stochastic, on the exponential, the fast stochastic right here. The orange line.
You share your screen?
Oh, it's my. Oh, you. Yeah, it keeps going out.
Mm-hmm.
Here. Doggone it all. How do I, hang on.
You had a big volume low back in March, the week of the 18th. 644 million shares that week. That's the biggest volume in the last couple years. And what concerns me, not that much, but it's currently 80 cents below that volume bar from 6 months ago. Well, that and it's China. But other than that, I like NEO.
Yeah, see right here, you've got a price here. Stochastic is down here. Prices come back down near that level. And the stochastic, fast stochastic, the orange line here, is way up here. So I would never see this as a short. It's made a huge move down. Both oscillators tend to be moving up. It doesn't mean that it's going to make a big move up. It doesn't mean it's going to make a reversal. It's just I would not enter short here.
It's basically electric cars for China. It's, you know, I think long term it's going to do great, but
well, I just looked at
in the interim. Yeah.
I just did some quick research. Okay, so on that quarterly report, see that September 7th, where it went up, but actually they lost $409 million for the quarter, and all the indicators to me sound pretty bad. And what's interesting is on October 1st, they announced their second and third quarter update for their deliveries, and they went up. And yet the chart's showing them going down around October 1st.
Didn't China go back into lockdown? And aren't they starting to have problems? Maybe that's a part of the economic cause.
Yeah,
everybody's afraid of China is what it is.
Yeah, not for my taste. I would not buy this. It's too, I don't know.
There you go. Ethan won't buy it and Carl won't short it.
Yeah.
All right. I think it's time. That was a great presentation. Gave me a lot to think about, Carl. I'd like to do what you're talking about with swing trades, actually, because I hate waiting for them during the day and constantly